Hello, traders. This is Mike with your weekly market prep analysis. Hope everybody's having a good Labor Day holiday weekend, good 3-day weekend here. It's a good time to get away, step away from the markets, clear your brain. If you can spend some time with family and friends, that would be great. We have an interesting week coming up, so let's dive right into this. Looking at the market, so we had non-farm payrolls on Friday. Non-farm payrolls, some interesting information in there, completely missed on the top line number. We also saw a little bit of wage inflation come in there with a low labor participation rate, which obviously sparked the stagflation trade on Friday. So, I think the important point to note for the market is that we got through that number. And really, all the number did was really push us to really wait and focus on the next month's number. A strong number maybe would have accelerated some things. A weaker number obviously has kept taper maybe a little bit to the back burner, though I think taper is still on target for the end of the year. I don't think anything has changed with that. The market is in an active sequence. It's breaking out. So made all-time highs again. We just continue to make all-time highs. So if we look in here at the SPY, you can see nice breakout last week. At the beginning of the week, really kind of flagged the rest of the week. If we go to the hourly chart in here on the SPY, you can see nice little high volume node that was formed last week as we broke out of the week prior's high volume node. So the market just continues to break, go sideways, break, go sideways, making all-time highs. So, this is some bullish action definitely in on the SPY. If we go to CAC again, having a good, nice little breakout in a nice little active sequence from this little break in here of value was, again, as has proven to be throughout the active sequence, has been good opportunities to buy. We go to the hourly chart, you can see Q's kind of doing the same thing that SPY did. We broke out of this little base here a couple of weeks ago, went sideways, broke out again towards the end of the week last week, and we just continue to make all-time highs and consolidate sideways, which is bullish action. If you look at small caps, IWM had a better beginning to the week. Actually broke through this value zone that we talked about. It's really this whole year has been in this nice little trading zone from the bottom, this nice little channel here, sideways channel from the bottom of the channel to the top of the channel. But we've talked about how really from the middle of summer on, we couldn't really get back above the midpoint of this channel, which is rated here. Well, this week we did nice strong bar in on here and looking pretty good. So if we go to the hourly chart, you can see at least the short-term view, nice little break this week. And we did come back down, test this area here. So this will be an important point to kind of look at. This 227.18 for small caps did have some weakness in on Friday, which would be expected. One thing that we are seeing is the economy has definitely pulled back. So we're starting to see consumer sentiment. We're starting to see sentiment numbers pull back. We're starting to see the economic numbers pull back a little bit. And, it's been consensus misses across the board. Don't think it's anything great. I mean, if you look at earnings season that we just had, 88% to the upside as far as surprise and increase. 2022 estimates have increased, as has the fourth quarter of this year increase. So earnings and corporations are telling us that, everything is smooth sailing still with the economy. But right now, we're seeing some numbers that kind of have pulled us back. And we talked about this on our show, our afternoon show last week, how, listen, small caps are really have proven to be a good leading indicator for the economy. And, so we expect them to kind of pull back a little bit. I expect to see a little bit more weakness in small caps, especially if we can, keep on getting those weaker economic numbers. Now, what I was hoping for, the trade that I'm looking for, is maybe get back up to the top of this zone and then see a little bit of a pullback that we could short into, that would bring us back to the bottom of the trading range. Now, again, as we tell you guys, as has been the case for the past year, rates are the one of the indicators you kind of got to look at, and rates are really, and you can tell by the moving averages how they're all kind of pulling in tight in here. Rates, it's okay, guys, for rates to go up. Okay, and you can see we had this little double bottom on the treasury, 10-year treasury rates here. We also kind of have this double top in here, and we have this 50 moving average that, you know, was a lid and kind of broke above. But rates, yeah, they are kind of filtering up, but they're not going up like we saw at the beginning of the year, which caused so much consternation to the market. It's the velocity that rates go up rather than them going up themselves per se. So right now, rates kind of sitting, grinding higher, but slowly grinding higher, which it has enabled tech to kind of be strong, has enabled stocks to continue keep a little head, little breeze underneath their sails to keep stocks moving forward as well. So keep an eye on rates. If we do see a sudden acceleration, that could put a lid on tech, that could put a lid on the market. But right now, if we keep this grinding nature, it should be fine. And if you look at the dollar, as we expected, as you would expect with a bad economic print, the dollar has dropped. And interesting, going into the number, really kind of had been dropping into the number. So as you would expect, the dollar expecting maybe some more easing, a little bit more, economic easing policies, which would play to a little bit of weakness in the dollar. And as we expected, we talked about that stagflation trade on Friday. We saw gold, really kind of surge off its 200 in here. We saw silver kind of make its move and kind of come up off the bottom here. And yet, we saw rates kind of going up, which is kind of counterintuitive, which, really that's all coming from what we saw in the non-farm payroll labor print, right? Because the problem is when you have an economy that's kind of pulling back, so growth is kind of pulling back, and you have wage inflation going up, that, prices going up, that's kind of the worst case scenario for the Fed. So I don't think it's anything to really worry about. If it was, you'd see a little bit more of a reaction into the marketplace. But we did see interesting in commodities, nice little pop up there going forward. You've probably heard ad nauseum, you've heard it from us, September, historically the weakest month in the marketplace. So, you got to be careful with your biases. We always say, look, we do an analysis, but the reason we do our analysis is really to put ourselves in check and to give us some levels and some things to look at. Okay. But, the market's set up for the greatest pain trade. We always say it's where it can inflict the most pain. Well, now if all of a sudden everybody's talking about September's going to be weak, come on, where do you think September's going to go? Okay. So just keep an eye on rates, keep an eye on the dollar, keep an eye on commodities, keep an eye on stocks and bonds. And you can really get a good idea of what's going on in the marketplace. Right now, we're expecting everything's looking bullish. You have oil. We kind of talked about this. Tyler talked about this on our afternoon show on Friday. This inverse head and shoulders pattern kind of forming right here. So oil kind of bouncing off the bottom. So oil being, up around 70 doesn't tell me that, the stocks are getting ready to completely fall off. Rates, we talked about rates being still relatively low, tells me stocks are still, looking good here. You have tech. Tech is, almost at highs, surging. That doesn't tell us that the market's going to pull off. Semiconductors, look how hot semiconductors have been. They continue to be strong, continue to be surging towards highs. And then we have healthcare. Healthcare, we talked about this trade last week on last week's video, doing strong. And then into Friday, really software was leading us stronger. You saw software stocks really good. So, those sectors being strong doesn't show us a market that's coming down. So be careful of what you're hearing on TV, what your personal biases may be. Even if you look in at consumer staples, look where consumer staples are, look where consumer discretionary is still strong. We're expecting maybe a possible rotation out of there into financials, into their 21 kind of, flagging in here a little bit. So, and understand this constant rotation that we're seeing in the market is really what underpins the market from a really, keeping a bid under this market. And we also talked about when we saw the SPY kind of fall down and everybody thought, uh-oh, be careful, this could bring us back down to the 50 past, maybe to the 200 here. Well, it was kind of Bank of America brought out a note and showed that, financials came in with huge buybacks here, and they've come in with huge buybacks in throughout these dips. So when you have corporations coming in market dips and you're seeing a really underpinning of buybacks, that is a bullish indicator. And so all the action tells us that the market looks really strong from a bullish standpoint moving forward. Also, you're not seeing really small caps. You're not seeing speculative conditions where really traders just, really just euphoria through the roof. Oh, this all tells us that, we're not overbought. You look at the put to call ratio, everybody's everybody thinks we're just going too far too fast. And so they're putting on puts to give themselves some insurance. That's not an underpinning. Remember, the market likes to be a mean reversion. It's the greatest pain. So what you would expect to see is, if people are constantly expecting a pullback, the market's going to keep on going. It's just sometimes as simple as that. So be careful. This week should be a pretty easy week. It's very light on the calendar. Wednesday, we got the JOLTS report. We have the Fed beige book coming into the afternoon. Friday is PPI. That'll be of an interesting statistic print of note, but that's really it. Nothing really to really grab hold of. We don't have the Fed meeting until the 20th, 22nd. So if you look at the bias over the last 6 months, we've really been first 2 weeks of the month, really strong up months. Then, going into that third week, we see that pullback, the options expiration, sometimes even that extends into the fourth week, see that pullback. We've kind of seen that throughout in here, as you can see. So we'll see if that continues. And with the Fed meeting coming towards the end, and we have quad witching this month, we definitely could see that trade happen. But we'll have to let our levels play out and see what we're looking at. Okay, so as far as what we're looking at going forward, I think Fang Gang's still going to be strong. We are looking really good in Apple. As far as this position's concerned, they had some pretty good information going into, we're going to be expecting their product announcement coming in September. Apple typically runs up into that product announcement. So let's see if we can get some positive action in here as they have kind of broken out above here. Nice active sequence. So Apple looking strong. I mean, Amazon closed above its 50, which was really important to have kind of flagging up here as it looks like it wants to go in and really close this earnings gap that it had. You have Netflix really just surging last week. We kind of missed this trade, can't get them all, so we're kind of upset about it. It's kind of painful to look at this chart, but still, if you're able to catch this Netflix trade, it was a nice trade out of this base. And this is what you're looking at, these nice ignition candles. They kind of flag in here. You get more ignition candles up. And then, you kind of really print a strong high. So Netflix looking good. Our trade that we gave you last week, Facebook did very, very well from its breakout. Nice trade for us. Microsoft looks strong as well. So the Fang Gang, Microsoft, nice active sequence. Fang Gang looking good. As far as other trades, we're still stalking this DraftKings. We're, kind of got back in here as it kind of was in this nice active sequence, nice little wedge up in here. Again, going the fundamental trade going into the NFL season. Typically, you get a good little run up on DraftKings. So we're going to see if it can continue its trade and keep on going. Again, keep your stop losses tight down. I definitely don't want it to see fall back at the bottom, past the bottom of this range on the hourly chart. looking good. Nice little active sequence in here. We're above the 200. So DraftKings, if you go to the monthly chart, kind of looking kind of decent. Weekly chart, kind of looking like nice little, after the ignition candle out of here, nice little consolidative candle, expect it to continue. So nice looking trade set up in DraftKings. AMD, kind of stalking this one. Not really ready to get in. For us, it needs to break this 111.64. Is holding. Well, I like the fact that it's flagging in here, holding in here kind of nicely. It found some good value at the 21, and then it kind of popped up and it's held this 9 really nicely in here. So if you look at the hourly chart on AMD, it is above this 200. If you are going to trade it as, maybe get in as an anticipation of a break, you want to see this 200 hold on the hourly chart. So it is kind of holding. It is kind of going sideways in here. We did see a little bit of volume kind of maybe creep a little bit back in on Friday. So as semiconductors were strong, so we'll see how that continues. Unity Software continues its breakout. We gave you this one last week. It was a good little trader. Nice little break in here on Thursday, Friday. Nice little flag. If you look at this stock, you've traded several times. Got a nice looking monthly chart. The weekly chart, nice little break of a flag on the weekly. So strong looking weekly chart in here. And this is what you like to see. You like to see decreasing volume. What I like to see a little bit stronger volume in here, but still looking good for Unity Software. Datadog continues its ascent up, active sequence, looking strong from this pro gap, holding this pro gap up. Just continues to grind. This is going to be hard. It's kind of compressed as far as the day traders concerned, but it is, again, this is the level we are looking at. You can see we kind of highlighted, this was the setup of the trade, kind of highlighted this nice support in on the 200 in here. So like to see some volume come in. It isn't like it was during the summer where we were trading it, but still nice looking active sequence on Datadog. Another stock that we've been talking about all last week, kind of setting up nicely, PayPal. So we like stocks that when the moving averages get really tight in here, it's what's happening here. It did close above the 50. You have a nice little zone in here that it broke out of on news that it's going to be actually allowing some of its customers to have a trading platform, stock trading platform. So interesting information. Keeping PayPal up pretty strong, looking strong. Again, this is our breakout point. We want to see it hold this 50. That'll be our stop loss because you don't want to see it fall back down above the 200 in here. So nice little action on PayPal. So that's kind of setting up a little nicely. Etsy was a nice little trader last week. Kind of gave you this one last week as well. Still in an active sequence, still 9, holding the 9 on this nice little trend line break in here. Would like to see a little bit more volume. It is now of note getting into this congestion zone. So you kind of, sorry about that. You kind of want to, watch this stock as it, it's all through here is pretty much congestion that's going to have to fight its way through. So I don't know if it gets through there cleanly, but on the short-term hourly chart, looking strong, kind of, shooting up there. Would like to see the volume kind of pick up in this one, but it's kind of the type of market, especially you got to realize from a seasonality standpoint, the last week and the week before was really some of the latest volume weeks that you typically see in the market. Another stock that we got back into was Home Depot. Nice little trend line break in here, kind of popped up on the radar. It was a little wedge in here. We like these wedges. Again, we like when the moving averages all tight in here. So we'll see. Home Depot, nice little setup in here. You can see it was overbought level 2 here, overbought level 1 on our indicators. Still got some congestion to get through, but on the daily, looking kind of interesting. If you go to the monthly, still into a nice little flag in here. If you look at the weekly, you can stay still technically in a consolidative squeeze zone, but again, we're kind of getting a little bit of a breakout. Nice little trade there. Another stock, if you like, blockchain, really with Ethereum running and all that, we'll get into that in a minute. I was looking for some blockchain stocks. This Hive HVBT, nice little trader on Friday. nice little 10%er, get ourselves right out of this little basin here. If you look at the weekly chart, nice little breakout on the weekly chart. You can see this is an important level, as it was the gap up level and the hold all in here. So interesting stock, it's got increased volume, which is what we like to see. So we'll be watching this stock here for continuation trade. And again, it's worked off its overbought level 2 as it burst through here. It's above the 200. So kind of watching this level right in here as far as a stop loss. Another stock that seems to constantly always be on our list, Snow. And Snow just, what, it finally got some volume all through here. Kind of got a little choppy, excuse me, a little whippy, but interesting stock. Interesting, that it's kind of holding this little breakout area. If you look at the higher time frames, you can see monthly. Again, just started a month, so you take this with a grain of salt. The month before, looking pretty good. The weekly chart, looking like a breakout. We like to see that wick down here rather than up here. So nice little ascent up. So we'll be watching Snow going into next week. DocuSign had earnings and a nice little buy out of this base here. It did close above this level that we were looking at. So it's one to see if you're going to get you got a nice little ignition bar out of here on earnings, overbought level 1, level 2. So we want to see this 308 level here, 308.50 level hold. Okay, 308.50 level hold. This one could definitely get day 2, day 3 could start an earnings gap move. And with software moving, we saw Crowd's kind of got little going here. It's held its 9 really nicely. It held this level. We love when these levels are all here. When you got levels that several different levels at the same spot, you like that, right? Because it gives an extra support, because people are looking at different things. And so, kind of, gives a little psychological boost. So this was a good dip buy off this 268 level. Looks like it could continue, especially with the way software has been pretty tight. DLO, this is one we traded last week. Interesting. You can kind of see in here, it's kind of got these levels. It's trying to hold above here. Nice active sequence. Lighter volume in here. You kind of got these declining tops. So, it's one to kind of watch here as you're above. You can see this little wedge. You can see what we're looking at here. So you want to wait for it to get back above this level. You want to trade it against this level. So see if DLO can kind of break out for us next week. And I've been talking about this SENS here on the show all last week. This SENS, one of our viewers, Theo, was telling us that, they're expecting some kind of phase 2 data on a drug. But all I know from a chart standpoint, nice little cup here forming, nice level. It's a lower price stock. If you look at the monthly, you can kind of see, again, where it was sitting the month before. If you look at the weekly chart, kind of gives you this little, kind of got this cup action in here, boom, kind of got this cup action trying to work up in here. So we like the fact that it found value in on this weekly chart. It's now breaking out and kind of going consolidating, going sideways in here. So let's watch this one. Put your alerts, see how it works going into next week. SE was a great winner from last week. Just continues kind of like Datadog, man. These active sequence stocks that just, they hold the 9 in here really nicely. Just continue to go up. Friday, on the softwares, really got it going. So you got to like that. Another stock, Nick's going to kind of rig me on this, but I actually like Myrna. Strong close coming in here. It's kind of breaking out of a base here. It's kind of, it closed strong in this area. If you look at the weekly, nice strong close to the week. So, Myrna definitely could be one that could get going. Be careful. Overbought level 2 tends to, here overbought level 2 brought us back down. It still is overbought level 2. So we're going to be careful of this. To me, a break up here, 419 could bring traders back into this and get it going again. So I'll be actually watching Myrna. A couple other stocks, guys. MN Monster Beverage. Interesting setup in here. Found value on Friday. If you look at the hourly chart, you had its earnings gap, or earnings drive up, kind of flagging in here on that. We need to see it above the 200 on the hourly and then break above this level. That's what I'll be looking at for Monster. Another one is this Beam Therapeutics. Nice little break up above here. If you look at the weekly chart, looks like a nice little breakout in here. You do have some congestion in here that you're going to want to watch out, but I like that beam in here. And then finally, you got this MVIS, just this consolidation. This was an active trader in the past, consolidating all the moving averages, getting tight. Volume's not there. This is one you don't trade a breakout unless the volume kind of confirms. It's kind of the way my Bumble was. Unfortunately, that did break out, even though the volume really didn't show up. That's okay. Let it go. I expected to run into some congestion up in here, but yes, my Bumble is running. But MVIS set a RVOL alert, and that should help you. Snap kind of consolidating after its pro gap up here. This is the level that you're kind of watching moving averages getting tight. That's why you want to watch and see if Snap all of a sudden can break. And lastly, lithium. Lithium has done really well. My LTHM, be careful. It looks like maybe a double top in here, but it is holding the 9 kind of nicely. And you do have the sector kind of breaking out. This LAC was the better of the two. You can kind of see here this nice wedge up, breakout at a 19, could have got up to almost 23 going forward. So again, guys, I guess the theme of today's talk that we're having is definitely, biases. Be careful of biases. Be careful of them, letting them affect your trading going forward. Know your levels. If you know your levels, and you know your indicators and the things to look at for, you're not really constantly shorting in here like everybody else. If you're watching CNBC, you'd be shorting in here constantly. So, we're in an active sequence up. There are some warning signs that we need to look at on the horizon. But if you looked at the taper video that I gave you during the last taper that we had coming out of the financial crisis of 2009, the market actually went up during that period. It didn't start to come down until we actually started raising rates. So I'm not really a big believer that the taper is going to be a big thing. What I'm more kind of honed in and focused on, how does COVID, the Delta variant, is it still affecting the narrative? Is inflation affecting the narrative of consumer sentiment? Because we have seen a drop in that. But the question is that going to continue to give us a weaker GDP print? Because we've had several companies come out and readjust their GDP forecast. GDP now came in, readjusted their forecast down for Q4. So that is the warning sign that we need to worry about. But the good thing is the market is going to tell you, and the bond market's going to tell you if that's the fact that we need to worry about. And the bond market is telling us right now, with rates kind of grinding up, hey, we're not really worried about growth going forward. You look at long-term rates, again, in this nice little wedge here, kind of wedging. So just be careful, because we are getting this wedge in here on rates. And a breakout to the upside gives us our answer. A breakdown to the downside gives us our answer. If we were to see long-term rates break down to the downside, then I think the economic thesis and the numbers have to start mattering going forward. So that's it. I hope you guys have a good trading week, and I hope you were able to take some time off and clear your head, and let's get back into the markets next week. We'll be on our 1 o'clock show, and we look forward to seeing you guys. Safe trading.